Hey, Mike Swanson here. I want to give a quick update over the market and go over 5 top stock charts. Now, overall, I got to tell you, I'm still believe that next year is going to be a bad year for the stock market, and that what we've really been seeing since the beginning of October is the final process of a top, characterized by declining internals, high stock market volatility, and former leader stocks falling below their 200-day moving averages, far away from them. So those moving averages are now acting as resistance. An example of such a situation is NVIDIA. I mean, NVIDIA is basically in a bear market. But the S&P 500 today did turn around right on support, 2583. I'm not too shocked that happened. And it does appear likely to me, and this is kind of what I was thinking anyway, that we can hold up, have some sloppy drifting action between now and towards the end of the year, and then be in big trouble next year. Because if we bounce here and then break down again, the stock market's going to be in big trouble, and lots of stocks already below their October, April, and February lows. I just want to make 2 points and talk about 2 stocks I highlighted first in November when I did a 5 top stocks update. One of them was Duke Energy, and it's at a new high. And so is, not near a new high, is McDonald's. And these are 2 stocks that are strong. Another one actually that went up today is Dominion Resources. So this is 3 stocks I want to talk about. And these are all stocks that are in defensive sectors. And that's also a characteristic of the type of stocks and sectors that you see lead at the transition period between a bull and coming bear market. So that's where the real strength is in the stock market. Stocks like Duke, stocks like McDonald's. We have seen some other defensive stocks come alive too, such as gold and the mining stocks, which are outperforming the market since October. But let me cap with 2 more stocks that are so popular that people own, and that's Apple to start off with. And Apple had a potential reversal today. I saw Jim Cramer get very excited about this, and he wasn't the only one. Like 5 or 6 people talking about this reversal on Apple on CNBC today. And yeah, that would suggest that Apple may bounce or may hold up here, into the end of the year. But Apple's still a damaged stock, and it's unlikely that this bounce is going to take it, if it even plays out, back above its 200-day moving average. And that's why Apple is now in a bear market. And this is the case with so many big cap tech stocks. And we'll just look at NVIDIA again. We can look at Activision, just on and on and on. So yeah, these stocks probably are going to hold up between now and the end of the year. They did fall so bad in October, November, but a bounce will just be an opportunity to sell, and that's another one reason why I think we're going to see the stock market really go into bigger declines next year than what we have seen the past 2 months. But that said, we are in a position where we can bounce into next week's Federal Reserve meeting maybe, or perhaps into Christmas, which will be a few days after that. So that's where things stand. The real leadership in the market's in defensive sectors, but everyone wants to play a rally. So if you want to do that, you buy a stock like Apple, you stick a stop loss order on today's low, but you've got to have a plan to take profits and get out, because these stocks are lagging the market averages now, and they're really going to lead to the downside, or they did in October, November, and they're probably going to do that again in the first quarter of next year. So stay tuned for our next email update, and I'll be talking with you later.